Hello everyone, welcome back to our Economy Prelims 2020 special series, and today's topic will be Bharat ETF 22. Before beginning this topic, let us try to understand some basic concepts about financial markets. Say for example, you want to start a business and the business requires an amount X. You only have half this amount, and for the rest of the amount you want to borrow from elsewhere. Now, what will be the motivation for someone to give you this half of the amount? Either they should believe in the concept of your business and they want to own a part of your business. In that case, they will be taking a part of your business in the form of shares. Now, if that person does not believe in the concept of your business, or if he feels that if it is too risky for him to give money into your business, he would be interested in giving you that amount as a loan or debt. Now, both debt and share in financial markets parlance are nothing but papers or a document which is a proof that you will pay back certain amount of money after a period of time in the case of debt, or you will pay back some dividend on making some profit as a part of the deal given in that particular share. So whenever we are talking about a stock market index, we are not talking about a bond or a debt. This index basically is an indicator of the performance of a set of companies which are representative of various portfolios. Say for example, in our Indian case, we have Nifty or the National 50. This index represents the performance of 50 best performing companies in various sectors like IT, pharma, banking, etc. So, to a layman who does not understand the intricacies involved in financial system, this Nifty is a simple indicator to make him understand the performance of stock market on that particular day. Now, exchange traded funds are those kind of funds which will track this kind of indices, and it will be easy for the investor to understand. The term fund generally means that a certain amount of money is pooled from different individuals with a certain objective. Now, this money is pooled by asset management companies, and normally when you hear about the term mutual fund, imagine it to be a case or a basket wherein you dump various debt or share. These debt papers and share, or commonly called equity papers, together have a certain value. Now, depending upon the purpose of this fund, whether it is to gain short term gains or whether it is to have long term steady but low income, the manager of this asset management company who is managing this fund will take certain decisions. So, if you want better returns, you will have to go for risky investments, and that is why you will get higher percentage for this kind of risky investments. So, as you can see, this entire process is way too complicated for a common man to understand, and realizing this objective and to raise more funds, the Indian government has come up with a concept called Bharat ETF 22. So this is basically an exchange traded fund, meaning it does not require a manager to make dynamic decisions from time to time. It basically follows a simple index like Nifty, and it requires very minimal management. So, if a particular index is performing well, that exchange traded fund will make good amount of money. Now, important point that you have to note here is this Bharat ETF 22 is a equity traded fund. So, this entire fund is made up of equities from various companies. Now, what companies are there are not really important for prelims perspective, but you also have to know that this is not just about public sector entities, but also you have certain private companies, and it is the presence of these private companies in this basket that makes this exchange traded fund an attractive investment option for common man. How exactly is this different from a mutual fund which is investing in stable blue chip or better performing funds? The answer lies in the fact that ETF 22 can be easily tradable on stock market, and therefore it has better liquidity than mutual funds. For mutual funds there is a certain lock-in period, and for Bharat ETF 22 you don't have such kind of lock-in period. Now, after this, you have to understand that now the latest development on this front is the government came up with another investment option called Bharat Bond ETF. What is that Bharat Bond ETF? Let us have a look at that in the next video. So stay tuned.